S-Corp versus LLC. Starting a new business? You need to watch this. Hey everyone, Adam Bergman, tax attorney and founder of IRA Financial. Generally, I spend my time doing videos about self-directed IRAs, 401ks, and other retirement accounts. Today, we're gonna have some fun. I got a lot of interest and a lot of questions from clients over the last couple of years saying, Adam, I know you're a tax attorney. Why don't you do some more general videos? Why don't you educate us, help us out? I know you set up lots of hedge funds and private equity funds and helped a lot of small businesses raise money when you were a practicing attorney. Can you give us some pointers as new business owners on what should we do? You know, there's so many different entity types. There's C-Corp, S-Corp, LLC, partnership, sole proprietor. What should we set up? I said, you know what? I'm going to do it. I'm going to put on my lawyer's hat and have some fun. So give me the next couple minutes and I'm going to tell you exactly what you need to know if you're a small business owner and why you may want to go LLC or you may want to go S-Corp. Because those are the two most popular entities for small businesses and startups. C corporations are more popular with larger companies that want to raise money from more shareholders or from foreign shareholders or potentially even want to go public. So let's focus today on S-Corps and LLC. Let's start with the LLC, limited liability company, which is now the most popular entity type for startups. And as the name suggests, limited liability company. LLCs, the first LLC statute was from Wyoming in 1977. 1978, the IRS issued Revenue Ruling 8876, which allowed Wyoming LLCs to be taxed as partnerships. And in the early 80s, all the other states enacted LLC statutes. So LLCs, every state recognizes an LLC. And this is what an LLC is. It takes the advantages of the S-Corp and the advantages of the C-Corp, and it combines them. So let's start first thing, limited liability protection. Just like a C or S-Corp, an LLC has limited liability protection, meaning anything outside of the LLC, all the assets of the owners outside of the LLC, and think of the LLC, I like to draw triangles, and I like to draw squares for corporations. Okay, so triangle for me just kind of symbolizes a funnel, like a partnership. And when I say funnel, you'll see when I talk about the tax advantages of an LLC, there's no entity level tax. So a corporation, think of it as a big box, and there's an entity level tax, which is now 21%, which can go as high as 26% starting in 2022, at least as expected. So an LLC is limited liability protection like a C or S. So any assets outside of the LLC are protected from creditors. Now again, assuming no one can pierce the corporate veil and there's no fraud of the officers or directors, the assets of the owners outside of the LLC are protected. So that obviously gives startup owners, business owners, some relief, some comfort, knowing that no matter what happens in my business, yes, I'll have insurance, but even if my insurance doesn't cover it, I'm going to be good. I'm going to be protected because the creditor can't go after my dog or my house, my car, or take my kids away, right? So we're good. So that's the first thing where an LLC and a C or an S-Corp are similar. Both have limited liability protections. Number two, let's talk tax. So an LLC like an S-Corp, again, let's draw a triangle. Think of it as a pass-through entity, a funnel. There is no entity level tax. Whereas a C corporation, Bucks, has an entity level tax of 21% in 2021. So let's give you an example. The numbers will highlight the main differences and showcase the main benefits of the LLC. $100 of profit on a C Corp, 21% tax. You're left with $79, right? Minus 21, $79. Now, let's say you assume your individual tax rate's 20%. So let's say another $15 tax. So out of that 79 minus 15, you're left with, let's say $64. Okay. Now let's say you earn $100 in an S-Corp or an LLC. No entity level tax in the S-Corp, no entity level tax at the LLC. The $100 flows through in both cases. And then the shareholder or member, in the case of an LLC, is taxed. assuming a 20% tax rate, $20, 100 minus 20, 80. C-Corp, they're left with 64. S-Corp, LLC, 80. 80 is more than 64. Even my 7-year-old kid knows that. That's why S-Corps and LLCs are popular. So now that we kind of pushed away the C-Corp, let's talk about S-Corps and LLC. S-Corps have limited shareholders. Only 100 shareholders, have to be U.S. persons, no foreigners. Can't have trusts or 401ks or companies. Only individuals, IRAs, or single member LLCs can be shareholders of an S-Corp. Not a company, not a corporation, and not a foreigner. LLC, no shareholder restrictions. Anyone can be a shareholder of an LLC. U.S. person, a foreigner, a corporation, anyone. Okay? So, flexibility. LLC owners are known as members. Corporation members are known as shareholders. Same thing, but different terminology. Corporation, owners, shareholders, LLCs, members. Corporation, corporate formalities. There's officers, there's directors, there's annual, quarterly meetings. There are potentially stock certificates. There are, in the bylaws and in the state statutes of corporation, there are corporate formalities. Okay, and this is generally outlined in the corporation's bylaws or shareholder agreements. LLCs, very flexible. No shareholder, no corporate formalities. No need for annual meetings. Okay, you don't even technically even need an operating agreement, which is the shareholder type document that describes the rules and procedures for the LLC. Have different class units, right? Ownership in an LLC could be known as percentage interest. So if I put in $99 and my friend John puts in $1, we can own 99% and 1% accordingly, or we can own 99 units or 1 unit respectively. Doesn't matter. So you have flexibility there, where we know in the case of an S or C Corp, we got shares or stock. Whereas an S Corp has 1 layer of stock. You can only have common stock. LLCs, you can have Class A's, Class B's, Class C's, different types of units or formalities in the LLC ownership. So again, flexibility. LLC generally wins. So you both have limited liability protection, both have flow through and taxation. LLCs have no corporate formalities. S-Corps have corporate formalities. And now let's talk about W-2. So this is probably the one element that tips the scale for some small business owners. In an S-Corp, you get paid as a W-2. Yes, you can have profits allocated to you, but compensation is paid through a W-2. And on the W-2, there is Medicare, Social Security, which is approximately 15.3 or 15.5%. So whatever you make in compensation, you have to add about 15.3% to it. Okay. LLCs, again, there's no W-2. You get paid as it flow throughs to you. So if you have a single member LLC, the income flows through to your Schedule C, and then that net Schedule C is subject to tax and that 15.3%. If you have a partnership where there's more than one LLC, more than one owner, you could get paid as a W-2 or more commonly guaranteed payments, which is kind of similar. So what's the angle here? The angle here is, listen, you take a smaller W-2 with an S-Corp, you pay less 15.3% Social Security and Medicare, right? So if an LLC, let's say you have $1,000 of profit, all that $1,000 flows through to your Schedule C, all of it subject to tax, all of it subject to Medicare, Social Security at 15.3%. S-Corp, you can say, you know what? Instead of that $1,000, I'll take a W-2 of $500, and then the rest will be business profits. 15.3%, not on the 1,000 like the LLC, it's on the $500 like the S-Corp. So that's the game a lot of small business owners play. That's why a lot of small business owners like to go S-Corp. But again, you lose the flexibility, one share, only US persons, you lose the flexibility in the corporate structuring, and there's also more corporate formality. Tax filings, S-Corps file an 1120S, generally due when the LLC is due. LLCs, one member LLCs, you file a 1040. There's no specific tax return. It's a Schedule C on your 1040. Obviously, that's due on April 15th. If you have a partnership, you're going to file a 1065, also potentially state returns, and generally that is due on March 15th or with extension. So the tax filings are quite similar for the S and partnership. If it's a single member LLC, it's on your tax return, Schedule C. The big difference here, if I got to summarize everything in like 20 seconds, is S-Corps, you can play around with the W-2. Again, the IRS is aware of this. So I would suggest talking to your tax advisor and taking reasonable salary, but you can play around with that 15.3% Social Security and Medicare. The negative is corporate formalities and the lack of flexibility in ownership and stock. Whereas the LLC is super flexible, easy to do, no corporate formalities, and you have pass-through taxation, you have limited liability protection, but everything passes through to either the members on a 1065 K1 or to your Schedule C. So there it is. I mean, hopefully now you know that the S-Corp and the LLC are probably your two best choices if you want to do business as an entity form for startups. If you look to go public or you want to have a lot of shareholders invest, or you're looking for foreign shareholders, probably want to go to the C-Corp, but keeping it within the S-Corp LLC world. Honestly, LLCs are super popular, but a lot of the business owners I talk to kind of prefer the S-Corp because of that W-2 play with the Social Security and Medicare tax. So there you go. I'm going to take my lawyer's cap off and come back to you as Adam, the IRA guy. But I hope you guys enjoyed it. It's kind of a little twist. It's a lot of fun. I get to pretend I'm a tax lawyer again, and hopefully educate all of you so you know exactly the differences between the S-Corp and LLC, and you can make the right choice when you're starting a new business. So good luck.